Hi, everybody. I'd like to welcome you to this week's episode of the Techno Analyst. I'm your host, Shirley Singleton. I'd like to welcome everybody back. I'm happy to be back, and I look forward to providing you with some good information over the next couple of weeks, months, years. I'm excited about our new format on the podcast. We're going to be talking about more fundamentals, meaning we're going to be looking at market environments. We're going to be looking at news. We're going to be looking at things that affect different markets. We're going to be looking at crypto market. We're going to be looking at real estate market. We're going to be looking at stocks, some forex, and we're also going to be having interviews from industry professionals, industry influencers. One of my upcoming interviews is going to be with loan officers. I hope to have a real estate segment either weekly or monthly where we'll talk about the market conditions currently, what's happening in the market that I'm in, which is in the Florida market, Northeast Florida, and also what's happening nationwide, and to help give you a better idea of, if you want to dip your toe into the market, you need to understand, what you're jumping into. You don't want to jump in at the wrong phase of the market, at the height of the market, the height of the speculative market. If you're looking for good deals, I'm looking forward to bringing you all of that information. So, as most of you know, I also have a YouTube channel, and on that YouTube channel, I'm going to be doing more technical analysis. I really enjoy technical analysis, and I'll be putting out a couple of technical analysis videos a week. I'm not exactly sure on the schedule, but look forward to checking out those. Make sure that you subscribe to my YouTube channel, which I will leave a link in the comments. All right, moving on to today. We're going to be talking about the Bitcoin ETF that launched on January the 11th. And how's that working out for everybody? So prior to the launch of the Bitcoin ETF, there was a lot of speculation around price action, that prices would go up due to high demand from investors, from institutional investors. And that didn't really play out. So the ETF launched on January the 11th. Podcast is being recorded towards the end of January. And on January the 24th, there was a tweet put out by BitMEX Research that showed the outpouring of BTC from some of the more well-established funds that were in place prior to the ETF launch, such as BTC, ARK, Bitwise, and Franklin. And there have been outpourings of BTC, like $430 million just out of GBTC, which is a grayscale Bitcoin, which is a grayscale ETF, and $25 million out of ARK, which is a hedge fund. So what is that? And then we look at Bitcoin price, which has gone down since the inception of the ETF. So what does this tell us? What can we intuit from this? So it looks like that there has not been high institutional demand for Bitcoin during these first 10, 9, 10, 11 days outside of a redistribution from these other funds that had higher fees to the Bitcoin ETF, which has lower fees. That kind of accounts for the Bitcoin price action being going down as opposed to going up like other people speculated. But now things seem to be slowing down and Bitcoin price seems to be recovering. While it is my belief, and this is just my belief, that there is a bull market coming, I don't think we're quite there yet. And when it happens, it'll be interesting to see if there is that institutional buy-side pressure that drives it, or if it's going to be something else. I like technical analysis. And from the technical analysis side, you don't really care too much about the fundamentals. You just care what the chart looks like. And we'll see how that plays out. But since this is the podcast and we are talking about fundamentals, let's talk about them. What do crypto fundamentals look like? Well, there are several different things that I look at as far as crypto fundamentals in general. There is the Bitcoin to altcoin chart, the Bitcoin dominance chart. That's what it's called. Bitcoin dominance chart gives us a perspective of the amount of, in the overall crypto market, the ratio between Bitcoin being traded versus all other altcoins. Typically at the beginning of a bull run, there is high Bitcoin dominance. And then the altcoins catch up. The altcoins start gaining steam. And then, at the peak of a crypto rally, then things start to go back down and Bitcoin dominance starts to go back up. That's usually how the cycle works when you look at Bitcoin dominance. But that's only one of the things that I look at it as far as fundamentals. Another thing that I look at in fundamentals is the fear and greed index that is based off of social media and Google searches and price action. And with that, there are several different sources for this. TradingView has a source, as well as there is the first, the original Fear and Greed Index website. But what this shows is it's kind of, it's sort of like an oscillator of overbought, oversold in some cases. But in times of severe fear, prices tend to plunge, and then in times of high greed, then prices are high, higher than the market generally will support. So times of high greed are followed by crashes in the market where the price, kind of comes back down and it gets a reality check. But then that's the overall crypto market. That's more general. But then when I start to look at specific coins, I look at, how in stocks you have your blue chip stocks, and then you have your junk, your penny stocks, stuff like that. There are things like that in crypto as well. So your blue chips would be is definitely, your blue chip is definitely Bitcoin. Bitcoin um, would be a blue chip. Other other highly rated tokens would be Ethereum, which has a extremely large developer base. Um, and then you have your meme coins would be more like your 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 junk, your junk stocks, or your penny stocks. They are highly volatile, and they do not, and there's a lot of risk. So when you start looking at a token, you have to decide what's your risk level. You know, that's one of the things that I would ask myself, is that if I have $100 and that's all that I have, then, you know, I might look at my portfolio distribution a little differently than as opposed to if I have like $1,000. If I have $100, then, you know, maybe I might, you know, be a little bit more cautious. You know, if and I'm looking to, and I'm want to be cautious, and I would probably invest a higher percentage of that into Bitcoin. If I have $100 and I feel, and my risk appetite is extremely high, and I don't care if I lose that $100, then I might invest all of that into an altcoin. But I would, once again, we'll talk about portfolio management in a different episode. But when investigating, because we're talking about just fundamental, you know, like what do I look for in fundamentals? That's one of the things that I take into consideration, is the type of coin. You know, like what's its use case. I go to the pages. I go to the tokens page, because I haven't yet to find a token that does not have a page that talks about it, that has information on it, such as its white paper that talks about the technology used for that token, different encryption methods and stuff like that. I look at what its utility or functionality is, and that's a lot of things that people tend to forget about when they look at cryptocurrencies, is that one of the key aspects to them is their utility. You know, what is it supposed to do? In the case of you know, like, is it supposed to solve a particular problem? Do they have a mission statement? And in the case of meme coins, they started out with pretty much no utility. It was the utility was, it was a joke coin. You know, it was just there to, you know, it was not meant to have utility. But in the rise, as we see the rise of meme coins, such as in the past Doge coin, and then there's Shiba Inu and Pepe, and now we have Bonk and Floki and Snake. A lot of other, there's tons of meme coins. So if you're going to play in that sector, the meme coin sector, you know, now that these meme coins have some form of utility, they have integrations into different infrastructures. They're being used as currency. You can buy stuff with these meme coins at different online stores, and games, in online games, they're being used, or for just daily purchases. And I found that interesting that, even so now there's even a hierarchy amongst meme coins. Like, what is the potential for this meme coin to grow? Like, how does this meme coin differentiate itself from other meme coins? Like, what is another thing with a lot of these meme coins is that they have different rates in which some of them burn tokens. So I tend to look at how many, is there a maximum amount of tokens that can be created? And if so, are all the tokens created up front? And if they are, then who's holding those tokens? Are the developers holding those tokens, looking for the price to go up, and then they dump it all at one time, crashing the market and leaving you holding the bag? That has happened in the past. So those are things that that one would look at when evaluating tokens. Another thing is how many people are holding this token. If they think it's a good investment, if only 15 people think it's a good investment, then is it a good investment? And what's driving that? A lot of these developers or development projects have GitHub accounts, and you can check and see the activity of these GitHub accounts to see, is this being actively worked on? And no code is perfect, and there's always new stuff going on in that has to be developed. They're bug fixes, stuff like that. If a project does not show activity, good development activity, then that's a red flag. The types of integrations, the number of integrations that a project has, or that it's being that have been developed for a project, is also something that I look at. And how many exchanges is it on? Because if it could be the best project in the world on paper, the white paper could look great, but if it's not listed on an exchange that people can get to, then there are going to be less holders, and there'll be less usage of that coin. There'll be less transactions for that coin or token. And so is it, what's its value? I mean, is the value going to I mean, that really impacts the value. And then also, what type of transactional system is it using? Is it using proof of stake? Is it using proof of work? Is it using proof of whatever? For me, it's something that I'm interested in finding out, because that impacts the number of people who are active in the community, who may set up nodes to process those transactions. What's the reward system for the people who support the network infrastructure level? How do they get paid? How, what are the transaction fees? How do the transaction fees work? Is there gas to be paid? Is there, because part of the issue with Ethereum is the high gas fees. And Bitcoin has a high transaction fee as well now, and they have these and people are building these things on top of um, these platforms. But is it really scalable? How scalable is it? I plan on going more into depth about in depth in future episodes about the different layers of technology, of blockchain technology. What does that mean? Um, what does that mean towards the different the tokens, and how that might impact their prices? In other news, Congresswoman Maxine Waters, top Democrat in the House Financial Services Committee, sent a letter to Mark Zuckerberg and Meta to ask why Meta is filing 5 trademark applications related to digital asset services and blockchain technology, and what those applications could portend for Meta's entry into cryptocurrency. Now, this comes after in 2022, when Facebook, Meta, abandoned their stable coin that they were Libre, or that they were working on, because of concerns from from congressional concerns. Now they're following up to say, hey, if you abandon all this, so what is this for? So I found that interesting. Also, we have Binance US losing their license for users in Florida and in Alaska. So because of the the conviction of CZ, former CEO of Binance, his conviction in U.S. federal court for money laundering, they have Binance US has in Alaska. They failed to come to a resolution for them to continue to do business in Alaska, and Florida has also said no. You cannot do business in Florida as well. So now they will be exiting those markets. I find that interesting to see if other states will follow up. Will this mean for Binance US? I find it concerning because in the US marketplace, we have a limited marketplace. We have big exchanges like Coinbase, big centralized exchanges like Coinbase and Kraken, and there are not a whole lot of other options. There may be some smaller exchanges, but and it's hard to get tokens. That's the whole thing with centralized exchanges. And still, with the adoption of cryptocurrency, it's still in its infancy stages. It's a lot more accessible for users who are new to crypto to use a centralized exchange before being able to maybe go to a decentralized model. It's just a lot easier for the user. So I do find it concerning that we are losing options in the centralized marketplace. While centralized marketplaces have their problems, they do have their advantages as well. And that's it for today. Also, check me out on my socials at The Techno Analyst on YouTube and on Facebook. Until next time, peace.